Hey, so welcome to today's video. Today I'm going to be going through HR Entertainment, which is an established artist management company based in China. The company was originally established in 2009. Have grown into a culture and entertainment platform comprising of three main complementary businesses of artist management, music IP production and operation, as well as pan entertainment business. So here's the homepage, just kind of showing off the artists that they have signed. It's mostly singers, songwriters, movie stars based in China, and they're also expanding out into Korea and other markets like Japan. So what I'm actually going to do is pull up the annual report here, and I've highlighted a couple of things that I just want to go through to kind of give you a good understanding of the business. So here it is, the kind of business review, what the business is about. They name some of the movies and TV series that some of their artists have been on. They released 14 digital singles, 10 digital albums in 2023. Bit about that. And then here we have total revenue, which is on the decrease. It's gone from 980 yuan for the year end 22 to 755 million yuan in 2023. And that's primarily due to a decrease in revenue generated from artist management. As you might know already, the Chinese economy is in a bit of a downward trend at the moment. A lot of Chinese stocks are have very depressed valuations, which is why I'm looking into that sort of area for stocks. And of course, like the economy isn't doing great, so you're going to see declining revenues at the same time. And then obviously, because of the declining revenue, they saw a loss in 2023, a loss of 142 million yuan compared to 1.7 billion in 2022, a 1.7 billion profit that is. And then they say themselves here primarily due to the fair value loss of convertible shares of 160 million incurred in 2023, while we recorded a fair value gain of convertible shares of 1.5 billion. Now, I'm not really considering these convertible shares because these are kind of mark to mark uh, things they have to do to kind of comply with the regulations, but it's not giving you a true understanding of the like profits that the company are making. So I'll actually get into that in a minute when we go and see the income statements and the balance sheets. But here's a good kind of outline of how much revenue comes from each of the three uh, businesses. So artist management is by far the biggest segment, 87, almost 88%. It's kind of been it's the same as last year, basically 87%. They haven't really changed that much. It's just the amounts have gone down. We have music IP and production, which is about 9%, and in pan entertainment business is 3%. So the artist management, basically what that is they arrange their artists to participate in different things like commercial activities. So, endorsing deals, business promotions, and other commercial activities like that. And then they get paid for that. Um, it says here during the reporting period, our managed artists attended various high profile business promotion activities and other commercial activities, underscoring their substantial commercial value. Meanwhile, our artists have starred in a wide selection of movies, drama series, variety programs, and public performances, which they're all going to get a percentage of revenue from that as well. Music IP in operation. We maintain an extensive library of original and licensed music IPs, which is intellectual property, basically songs, albums, that sort of thing. Um, they've built an extensive IP library, 1,290 musical works. In the reporting period, they've released 14 digital singles, 10 albums, 72 total songs. And then for the pan entertainment business, which is the smallest, it's about 3%. Um, yeah, they've generated a small portion of our revenue from other businesses in the pan entertainment business, such as commercial development of virtual artists, variety program format licensing, and sales of artist related merchandise. So that's not really going to have a big effect on the kind of bottom line, but it's nice to add on to the top. So let me scroll down here. Our strategic approach focuses on identifying and developing talents that can make a significant impact both locally and internationally, thereby reinforcing our commitment to fostering global entertainment icons. So they're looking at you know young young people that have the potential to make it in either movies or have a great voice for singing. They have a lot of artistic talent, and they're looking to kind of pick them up when they're young, when they're not well known at all, and then they're kind of trying to nurture and train them into becoming huge global media stars. That's kind of what they're aiming for here. And then we have here some of the songs that their Korean artists in their Korean business have been in. Um, a lot of movies that have they've been released globally: US, Canada, Australia, New Zealand, UK, Ireland, Singapore, even Russia, Malaysia. So these are like big movie stars, big names. The Glory Part 2, Soul Land, these aren't small movies at all. So this is kind of the important stuff here. The gross profit for artist management, which accounts for about 87% of the total revenue. So the bulk of revenue here is down 55.5% year on year from 295 million to 132 million. And the cause of that is decreased revenue generated from artist management business and an increase in cost of revenue, mainly as a result of increased promotion and marketing activities for concerts or managed artists participated in. Now, this is primarily due to the discretionary income in China decreasing as the economy decreases. That's what happens when there's a decline in the economy, right? There's less money to go around on things like concerts, buying albums, going out to the cinema to watch movies, that sort of thing, right? But that doesn't mean that songs, concerts, and movies are going out of fashion. They're going to be gone in 5 years, 10 years, right? There's nothing replacing, like, there's no fear of that leaving, right? So as soon as the Chinese economy picks back up, which it will soon, maybe 3 months, 6 months, could be a year, could even be 2 years, I don't know. You don't have to predict that to know that songs and music and movies are still going to be here in probably 100,000, 10,000, even 10,000 years. There's probably still going to be movies and songs, right? So all you're betting on this company, right? As long as it's at a good price, you can see they're making decent money. They're making hundreds of millions of yuan every year, billions in some years. The operating income, I'll show you here now. So let me scroll down. Operating income in 2023, 31 million. In 2022, 200 million. I'm sure in 21 and 2020 it was even higher. The gross profit is great. There's good gross profit margins. Look at that. That's almost, what's that, like 30%. Um, and obviously, if you look at the profit per year or the net income, you're going to see, whoa, it's gone from 1.7 billion down to minus 140 million. Now, that's purely down to the fact of the convertible preferred shares, the fair value changes. That's what I'm saying about the kind of accounting measures to keep up with the regulations. I'm not including this because that's going to just be a different number every time, and it's not a true reflection of how much the business is actually making. And then if we go down here to the balance sheet, you can see assets of 800 million. These are non-current assets, I believe. Yeah, non-current. And then we have current assets, 1.2 billion, cash and cash equivalents of 600 million. So that's total assets of over 2 billion yuan. Um, Keep in mind, this is yuan, not US dollars. Total equity, 1.3 billion. And keep these figures in mind when we take a look at the market cap stock and the stock price, right? Liabilities, 300 million. Current liabilities, what's that, 420 million. Total liabilities, 720, right? And the total debt, here we have borrowings, 266 million. That's not a lot. right? And when you do the calculations, and I'll show you the stock price in a second, but when you do the calculations, you see debt of 266 million gives you an enterprise value of just 228 million. 228 million for a company in a really high return on equity industry. They're making positive gross profit. They have top movie stars and singers under their label in China and Korea, expanding into Japan. Positive operating profits in the tens of millions, if not hundreds of millions. And you're telling me that you can buy that whole company, enterprise value 230 million, right? Now let me bring up the stock price. 66 Hong Kong dollars. Market cap 575 million. So we have a company with mainstream artists all over China, in Korea, expanding to Japan, top movie stars, top singers, songwriters, amazing artists with an enterprise value of 230 million, operating income of, let's say, 100 million a year on average. It was 30 million this year on a bad year, on a very bad year in China. Last year, what was it, like 200 million of operating income and a market cap of 575. That's, let's just be generous and say 100 million income, operating income. That's 5.7 PE on the operating income. And the big reason behind that is this giant decline in 1 or 2 days in January. It was sitting pretty, it was making a nice kind of run up here until boom, 11th of January, boom, straight down 84%, and it's down even more since then, right? And it actually only went public recently, start of January, right? What on earth could be the problem that a stock falls on pretty much, let's say, 90%? What could possibly be wrong? I'll tell you what's wrong. This is the article that tells you it is worth notice that YH's 1 year ban on major shareholders and corporate executives from selling the company shares will expire on January 19th. The shares that will be unlocked will equal about 40% of YH's total. Some investors probably believe that some equities will be soon released to the market, so they hurried to sell their own shares before the stock price fell, said a strategic analyst at Zhongtai Financial International. Right? So we have a giant decline that's not to do with anything to do with the business, purely to do with price, because 40% has been unlocked to sell. So obviously everyone's going to rush to sell if you want to sell, if you want to free up some cash, right? Maybe they want to buy a house. Maybe some director needs the cash to buy a house, whatever. And as well, Chinese markets are known to be a lot more liquid than American markets, which is why we see wild swings like this. But how I look at this, right, is we see a giant decline. So straight away you're thinking, is there a problem with the business? No, there is no problem with the business at all. It's the exact same business as it was when it was here at 768 on 9th of January. It is the exact same business. They haven't even released any earnings, any commentary about future earnings. They have done nothing. It's purely down to this story of investors selling off because corporate executives can now sell off 40% of their shares. So yeah, all in all, this looks like a great business, selling for a crazily cheap price in China, which is a growing economy, probably one of the fastest growing economies in the world. It's on a decline at the moment. That's short term, temporary. It will turn back around, and once it turns back around, I can see this stock shooting back to at least where it was around this 567 Hong Kong dollar stage. It could even go further than that. It's at 63 cents right now. It's a no-brainer for me. So thank you for watching this video. If you enjoyed, like, subscribe, and I'll be back again maybe tomorrow with a new investment idea.